Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Today I want to talk about PSTH again, the Bill Ackman SPAC that people used to love and now they kind of hate. I want to talk about what the deal is actually structured like. If you own PSTH, what are you actually getting? When should you own it? When are the things going down? And how to properly value this. I put together this spreadsheet for you guys to use to play around with as you watch this video, or even if you don't watch the video, you can just hit file, make a copy, and you can play around with some of these values. There are a bunch of formulas in here. The stuff you should be changing is the stuff in blue. Now that we have an FAQ, now that we have an investor presentation, I feel like I understand the deal a good deal better. However, there are still a few things, especially around the tontine warrants, that I don't understand that weren't clarified within the presentation. I sent an email to investor relations. I haven't heard back yet. So once I do, maybe I'll do another follow-up video to clarify some of those things. But at this point, I should have a pretty good idea of what's going on here. And at least from my perspective, how to value these things. Remember, guys, I'm not a qualified financial advisor. Please talk to a qualified financial advisor before making any investment decisions, especially around a complicated deal like this one. There might be tax implications. There will be tax implications, especially if you're outside of the United States. There might be implications around who you can use as a broker if these shares of UMG end up trading on a foreign exchange. It's a real mess of a deal that honestly isn't kind of the best thing that you were hoping for as a PSTH investor, especially if you bought in at a high price point. You know, there's a lot of complexities here, a lot of potential tax implications. I personally like the deal only because I really love UMG as a company. I really love the music business, and I think the deal is relatively fair in that front. But there's still a lot of questions around, you know, Remainco, what the hell is that? Tontine warrants, what's the strike price? How many are there? Are they getting split? SPARC, what's the value of that thing that is going to be unanswerable at this point, right? The only really thing that we can grasp our hands around is the UMG deal. And even with that, some people aren't happy with what they got versus what they were expecting. At the end of the day, this is not a traditional SPAC deal. You're not buying a company. You're just buying a 10% ownership in a future spin-off on Euronext. This should say spin-off, not IPO. So it's complicated. It's oddly structured. And there's a weird timeline you have to get to know if you're a shareholder. So let's talk about the timeline first. I put together another spreadsheet that sort of outlines what was presented in the Tontine Holdings presentation a week or so ago. This is more of a what does it mean, what happens, when does it happen type of thing, and when should you own the shares if you want to get everything that is included within the shares. So one thing to know is that PSTH is a weird SPAC, and that includes tontine warrants that get distributed to shareholders if they hold past a certain point, from a certain point as well. So that's a unique proposition that this one had that isn't really playing out like investors hoped, because you were sort of expecting that you would get the chance to buy whatever company they would get with PSTH. However, the tontine warrants do not transfer to the UMG sale. They transfer to the Remainco sale, which is kind of messy. Plus, you don't get the chance to participate in the UMG unless you own the distributable warrants that are trading right now. So let's look at how this deal is structured and when it happens. So the deal was already announced. In a couple of weeks, probably around mid-July to early August, there's going to be a share redemption tender offer. This is standard with SPACs. It basically says, hey, if you don't like the deal, we'll take the shares back and we'll give you your $20 back. I don't assume that anybody will take advantage of this unless the stock drops in price heavily in the next couple of weeks. At the end of the day, you get $20 back. And right now the stock is trading at around $22.50, and you have, you know, other things that are included within it. So it probably doesn't make sense to take advantage of the share redemption tender offer. However, if the stock drops in price, however unlikely that may be, below $20, there may be a lot of redemptions. This does put the deal at risk because at the end of the day, they are taking money out of that $4 billion fund that they have if they have to give money back to shareholders. After that happens, but before the close of the warrant exchange offer, and we'll talk about what that is in a second, the tontine warrants record date will happen. So if you want to get those tontine warrants, you have to own PSTH before the close of the warrant tender to eventually receive tontine warrants. So you want to own the PSTH shares before this record date. Don't know when that will be, but it will be probably after the share redemption tender offer and before the warrant exchange offer, which will be in a similar timeline. So not too long from now. If you're holding shares of PSTH today and you hold them through the end of the year, you will get your Tontine warrants. If you buy them, after the Tontine warrant record date or after the close of the warrant exchange offer, you will not get the Tontine warrants, essentially, is what that means. So in mid-July and August, probably a bit after the share tender redemption offer, there will be a warrant exchange offer. So what this means is that warrant holders, people who own PSTHW, PSTHWS, they can exchange those warrants for PSTH shares to participate in the UMG offering. If they choose to, they get PSTH shares, but no Tontine warrants at a specified ratio. This is anywhere from 0.237 to 0.34-ish shares of PSTH per warrant. Kind of why warrants are trading where they are. They sort of assume that you will get a share of PSTH, and they're not going to move a lot until this warrant exchange offer happens. That's one thing to keep in mind if you're buying warrants right now. They are very much pegged to the price of PSTH because a lot of them, if not all of them, will be exchanged for shares of PSTH, which will then allow those warrant holders to participate in the UMG offering. So only the people who have warrants from the units will be able to participate in the UMG offerings. People who get Tontine warrants as longtime shareholders of PSTH will not be able to participate in the warrants for in the UMG offering. What happens is after that exchange offer happens, Tontine warrants get distributed. So before the end of the warrant exchange offer, but one day after the Tontine warrant record date, PSTH shareholders will get warrants at a 2/9 ratio per share. So you want to hold multiples of 9 as partial warrants will not be issued. Somewhere in this area, you'll also get a SPARC record date. PSTH shareholders, even those who got PSTH from the warrant exchange, will get a SPARC distribution if they hold before this date. And then one day after that record date, you'll get that SPARC distribution. And if you're not familiar with the SPARC, it's the rights to buy a future company at $20. And you get one for each one share of PSTH. The annoying thing with this is likely a taxable event based on the fair market value of the SPARC, and who the heck knows what that means. So as a PSTH shareholder, that's something you have to keep in mind, that you're going to get some UMG shares eventually. You're going to get some of these Tontine warrants, which are likely not a taxable event. And you'll get the SPARC thing, which is a little bit extra, that is likely a taxable event. So keep that in mind if you own a lot of shares. Late August, early September, after a lot of this stuff happens, PSTH will kind of exercise their forward purchase agreement and pursue the deal with UMG. They will buy 10% of the shares outstanding of Universal Music Group from Vivendi. So Vivendi is sharing 10% to PSTH shareholders, not using all of the money in PSTH. And because of that, around the same time, I'm assuming, this is not specifically shown in the presentation itself, PSTHR, the Remainco, that is essentially the remaining cash from PSTH, will be spun off and issued to shareholders. This will be at about a $5.42 price point because that's how much cash you're getting. Eventually, this will be split. There will be a 1/4 reverse split to kind of get it back to that $21, $22 price point. And we'll see that in the spreadsheet on the other side, but you'll get that around the same time that the share closing happens, probably, or around the same time that UMG lists on Euronext Amsterdam. So on or before September 27th, UMG, which remember is a PSTH shareholder you now own 10% of, will list on Euronext Amsterdam, which is a foreign exchange. Vivendi is spinning off 60% of UMG shares and listing it on Euronext Amsterdam, again, a foreign exchange. If this ends up being the way that this is structured, that people who get PSTH end up getting shares of a company listed on a foreign exchange, you want to make sure that you're checking with your broker to make sure that they handle foreign exchanges. Some of them don't. So that could be a problem for investors, especially small investors who aren't savvy enough to know that. And then what happens is that money, that those shares are essentially put into a trust for PSTH shareholders, and they're held in that trust until late November to early December, upon which time the trust releases UMG shares to shareholders. So shareholders of PSTH at time of sale receive their UMG shares from the trust at time of sale of UMG rather. So that late August, early September. So that's the annoying part of this as well. That's another annoying part of this is that basically once the UMG share closing and trust happens in late August to early September, you are no longer in control of that money. That money is going towards the purchase of UMG. UMG is put into a trust, and that trust is non-transferable, non-tradable, so you can't trade it on the stock market. They're keeping your money, they're keeping your shares until late November and early December when they release those UMG shares to you as a shareholder of PSTH at time of share closing / trust, right? So that is another thing. If you need this money, could be an issue for you because you won't be able to access it until you get your UMG shares. What happens between then? Well, between the time of those shares going into the trust, remember UMG lists on Euronext Amsterdam. It is a spin-off, so spin-offs don't generally have a pop like IPOs do, but if you wanted to sell right away for whatever reason, you can't because your shares are held in a trust. You won't get them until December. If the stock price soars 50%, you can't sell it because your shares are held in a trust until December. If the stock price soars 50% and then drops to where it was in the beginning, you're kind of screwed because you won't get your shares until December, early December, right? So that's one thing to keep in mind here. There is some risk with that process, and it is kind of annoying. Why are they doing this? Well, I think in the time that, it takes a while to distribute those shares to every shareholder of PSTH, so they have to work through all of that stuff. I think they're going to be working on actually listing this on an American exchange because that would be very beneficial for shareholders of PSTH who bought in America, because it would be kind of annoying to have to deal with a foreign exchange, and you remember, it might not be listed on an exchange that your broker trades with. So if that's the case, you might have to transfer it to another broker. A lot of annoyances here that is certainly not what people were expecting when they bought PSTH, right? And that's not even talking about the warrants that you're getting that are being transferred over to this Remainco that you are no longer able to use, the tontine warrants that is there, you're no longer able to use with PSTH. And again, some people bought PSTH because they are getting these tontine warrants, because they are getting this little bit extra. However, now that extra is being transferred to some future Remainco company that is a total unknown. And now you have all of this taxation, foreign listing complexity that is being added to it. So certainly a lot of people aren't happy, and I see why. And I certainly understand that aspect of things. And it is a bit of a sloppy mess, to be honest. So all of that in mind, hopefully that kind of clarifies what's happening and what's going to happen with your shares. Let's look at an actual example of, hey, let's see what happens if I own X amount of shares. So let's look at an example where you own 900 shares, or even just to make it weird because it's not a multiple of 9, let's see what happens if you own 750 shares. Really, if you want to make sure you're not getting any partial cash or anything like that, you want to own multiples of 36. But even with multiples of 36, you'll probably get some fractional cash because your UMG shares will be full shares, and the calculation here accounts for that. There will be fractional cash. If it is not a full share, they will not be doing partial shares when accounting for all of these distributions. So let's say you own 750 shares. You purchase them at $22.51, which is what it's worth today. It's about $16,882 worth of cost basis. So for your 750 shares, you get about 0.637 shares of UMG. Why are you getting about 0.637 shares, not one? Well, there's 184.7 million shares of UMG. That's about 10% of the company. There is about 281.5 million PSTH shares. Then there's about 8.64 million warrants that will be potentially redeemed due to that warrant redemption offer. The assumption here is that all of the warrants will be redeemed. That probably is the best deal for you if you're a warrant holder. And then that means there are 290.1 post-warrant redemption shares of PSTH out there. So it's this divided by this gives you that 0.637 pro rata share of PSTH. So that doesn't mean, you'll have an undervalued accounting for this. It just means that, hey, you'll have slightly less shares than you would if you were expecting a 1-for-1 transaction. This number could be slightly higher if less warrants are redeemed, but this should be around there. So if you own 750 shares of PSTH, you will now own 477 shares of UMG. You'll get about $14.75 of fractional cash because, it's not a full number. This is a full number that they're releasing for you. And you'll have a cost basis of UMG of $21.84. That's the $13.91 cost basis. That's pro rata. That was presented in the presentation divided by 0.637. So your cost basis for your UMG shares will be about $21.84. So if at the end of the day you're trading above that, you've done well. If you're trading below that, you've done poorly. On top of that, you will get 750 shares of Remainco, which is cash to be used to acquire a future company. This will initially trade at $5.42, but we'll have a reverse 1/4 split, which is why over here we're only showing 187 shares. And again, this will only be full shares. So if you want to get a full share, you want to trade in multiples of 36 to get a full share of the Tontine warrants and a full share of the Remainco. So in this case, you get 187 shares post-split. So 750 divided by 4, rounded down to the nearest full share. You get $10.84 in fractional cash because you're only getting full shares here. And you have a $21.68 post-split price of PSTHR. So that's what it's valued at. And then you also get your Tontine warrants. Now, what I'm unclear about here is that whether or not these Tontine warrants have a split. I believe the answer is no. Only the strike price will be adjusted for the split. So if the answer is no, the amount of warrants you'll get is 166. The issue with that is if they don't split these, there's going to be 72 million shares of PSTHR and then 62.2 million warrants outstanding plus 6% in direct or sponsored warrants. That means that there's going to be like 50% dilution in the future, which again, the money goes to the company based on the strike price, but that is a boatload of dilution and very concerning as an investor in Remainco in my mind. If they do split them, then there's 1/4 of the 62 million, but you only get 41 warrants. So now this 2/9 Tontine warrant that you were supposed to get, it suddenly becomes 236, which is why I think they won't split them, and we'll just have to deal with the ridiculous amount of dilution for Remainco, but we'll see. This is getting a bit complicated at this point. So either way, you'll get 166 warrants or you'll get 41 warrants if there's a split. These are not going to be partial. So if you do not own a multiple of 9, so again, a multiple of 9 here, a multiple of 4 here, which is why I want to own a multiple of 36 to actually get a full share of Remainco and a full Tontine warrant, because any warrants below that will not be issued. So if you have 8 shares, you will get 0 warrants. If you have 9 shares, you will get 2. That's kind of how it works. Or I guess if you have 8 shares, you'll probably get 1 instead of 2. And then you also get the SPARC. So that's a 1-for-1 assumption. You'll get 750 SPARC rights. These are the rights to buy a future acquisition at $20. You're not tying any money up, but you do have to have $20 at the time when that acquisition happens. What the SPARC is basically they're going to say, hey, we're acquiring company X. If you want to participate in this, say so, and then you'll have to pay us $20 to get a share of that company. This is essentially allowing you to participate in PSTH, in a PSTH type deal at net asset value, kind of like how hedge funds are able to do when it comes to SPACs. Most individual users are not able to do that outside of now when SPARCs are basically trading around $20 anyway, or $10, the net asset value. So whether or not this has any value really depends on what the company is going to be. And it's kind of the same thing on PSTHR and Tontine warrants. At this point, who the hell knows? So that's kind of what's happening. You can put in your number of shares and your number of your price point here to kind of figure out what you're getting. So again, if you're getting more shares, you'll obviously get more shares of UMG, more shares of Remainco, more Tontine warrants, more SPARC rights, etc. But this will help you calculate that and know exactly what to expect. I've also added some things to note here and things that I talked about before. Remember, UMG shares will list on Euronext Amsterdam. US listing is unknown, but would benefit US investors. You definitely want to check with your broker to see if they handle foreign listings. If the distribution in December does end up being foreign shares, that could create some issues with for certain investors. UMG IPO, and that's more of a spin-off, will happen in late September. Those shares will be held in trust until ready to distribute near the end of year. Kind of crappy for investors because you're not you don't have access to that money for a couple of months, which sucks, especially since who knows what's going to happen with the spinoff. The trust rights are non-transferable. You can't sell them until the distribution of UMG shares happens in your end of year. Values that I'm throwing in here are best estimates based on currently known data. And again, some of this information is based on currently known data. It may change, so keep that in mind. I will update this spreadsheet. If you find anything wrong with this spreadsheet, let me know. My Twitter handle is up there, Time in the Market, just like my YouTube account. If you are enjoying these videos, make sure to subscribe, like, and all of that good stuff. You get your standard SPAC redemption offer that's happening in July and August. Again, that could put the deal at risk if there's a high level of redemption, which is very unlikely in my mind. If you own warrants today, this is before the Tontine warrant. The warrants are released, the Tontine warrants are released. You do have the option to participate in the UMG deal via that warrant exchange offer that's going to be held in July and August. If you choose not to participate, your warrants will transfer over to PSTHR, so you'll get PSTHR warrants, which I personally think probably have a lower value than these, than they're currently trading at. So I'd probably, if I had warrants, which I do, I'm going to participate in that exchange offer and get more shares of PSTH and participate in UMG, because that's really why I'm interested in this deal. I do like UMG, but I don't love the rest is essentially what it comes down to. Warrant exchange ratio is going to vary, and it was illustratively set at 0.277 shares per warrant as of the presentation, but it will depend on the price of the PSTH shares before a couple of days before, like the average of 10 days before the exchange offer date. In order to receive the Tontine warrants, you must be a shareholder before that record date, usually before the close of the warrant exchange offer. The reason for that is, they don't want to release Tontine warrants to people who just got PSTH shares as part of this exchange offer. They're supposed to be designed to reward people who have held for a long time. And in this case, it means, hey, if I bought today, I'll still get them. It's not really holding for a long time. Kind of screws the people that held from like day one, but hey, it is what it is. It's kind of how this thing works. I have been holding for a long time, so I probably would have been better off just waiting and buying it close to now, because it's probably like 6% of my price point right now anyway. So. And again, in order to receive those warrants, you have to be a shareholder before the close of the warrant exchange offer, before that record date. Distribution of Tontine warrants and the SPARC will happen one day after each individual record date, to be determined, but likely early August, late August, early September. Remember, if you want the Tontine warrants, hold PSTH shares probably today before the record date. If you want the SPARC, you can still get those after the record date, but after the warrant exchange offer. So if you are a warrant holder now, you exchange those for PSTH shares, you will not get Tontine warrants, but you will get the SPARC. The SPARC distribution is likely a taxable event, which kind of sucks, and it's going to be at fair market value. Who knows what that's going to be? Hopefully it's not a lot, because I don't want to pay a lot of taxes on something that I may not use for 5 years. And then UMG distribution may have tax implications. Talk to a tax accountant if you have a ton of shares, because it may have sizable tax implications, especially if you're a foreign investor. Some of these may be treated as a dividend, which may have as much as a 30% tax on foreign investors. Usually for US investors, your taxable gains will probably be small, and then most of the potential tax implications, or if it's treated as a distribution, will be treated as a return of capital, which should reduce your cost basis for some of your shares. So you wouldn't have to pay taxes on it today outside of the taxable gains that are out there. So that's that. So is the deal any good? That's really the question, right? You can play around with these. Again, file, make a copy, talk to a qualified financial advisor, all of that good stuff. Is the deal any good? Depends, right? If you bought it at $21, $22, it's probably a pretty decent deal in my mind. If you bought it at $28 and $30, you're probably somewhat disappointed, because it might take a bit of time to get you to the valuation you need to get to, and it might depend on PSTHR and that SPARC being a pretty decent deal. And the reason I say that is because we'll go through the valuation exercise. So what happens is that UMG is being valued at about 42 billion, enterprise value of 42 billion, a market cap of about 38.4 billion. The The 42 billion does include some holdings that are beyond the business, like some holdings in Spotify, Tencent Music, Entertainment, Vivo, Deezer. The presentation values at about 1.2 billion. It claimed that some people valued it 2 to 4 billion, so maybe there's some upside there. The valuation is about 22.3 EV over operating profit, which I believe they said was EBITDA. That's about slightly lower than WMG is trading at right now, 23.1. There were some other comparables. Reservoir Media, which I did a video on, was trading about 20x. That's a much smaller player, but growing faster. Gnosis Music Group, or whatever it's called, the group in the UK that's been buying music rights, is valued at about 26x. So 22.3x, especially when you compare what it looks like against WMG, seems relatively fair. They have 32% of the recording music share versus 16, 23% of the publishing share versus 11 for WMG. They're in almost double the markets, more than double the markets. They're growing their revenue at a better clip. They're growing their operating profit at almost double. Their operating margin is better, and they're trading at a lower multiple. So the deal itself is pretty okay. Some people will say, well, is it really that okay? When Tencent bought this thing at about 30, well, they bought it at 30 billion euros. So Tencent bought this at 36 billion euros. Remember, what they bought that in March 2020, and Microsoft was trading it at a 50% discount in March 2020. So they clearly bought it at a time where valuations were lower than they should be. Since then, their operating margin has gone up by about 18%. So now that PSTH is getting this at about a 15% boost over the Tencent valuation, obviously buying it at 36 million is better than buying it at 42 billion, but it's all relative in terms of the multiple. PSTH is buying it at a slightly lower multiple, actually. So it sort of is what it is. However, none of that really matters. What matters is it priced fairly, or is there upside in the price that you're paying for this today? In my mind, I think a fair multiple of this is probably a bit higher than 23. Even if you go 25, 26, I think that's relatively fair. That would mean your 2184 cost basis becomes 2546. And essentially, even if you value at some of this other stuff, probably makes the investment relatively worthwhile. The thing to remember is that this is the multiple you're paying today. The other question to ask yourself, if I'm going to hold this for 5 to 10 years, do I think this business is going to grow at a pretty decent clip? And my answer is yes. I think this could be a company that, one, not only gets a higher multiple once it's spun off than what the private market is giving it, that when Tencent gave it, than what PSTH gave it, but also grows the operating margin that is underlying that multiple at a much higher clip than the market itself. So if the standard market multiple is 18x, this is a 26x, there's got to be a reason for that. And that reason is that these guys are growing their operating margin by 20% plus, whereas the market is maybe growing it at a sub 10% range, right? So that's why they're getting a higher multiple. And if that multiple remains where it is, and they're growing their EBITDA by 20% for the next couple of years, you're potentially looking at a decent 20% return for a couple of years, which I don't think is crazy in terms of the underlying holding itself. And that's, so even if the multiple doesn't really expand, but UMG is able to grow their EBITDA by 20%, you're still looking at a 20% return, because that multiple should follow that growth rate. And even if it remains steady, that 20% growth will be reflected in the stock price. So that's why I like UMG. I think it's a high margin, high growth-ish business. I mean, it's not technology growth, but it's pretty good growth. And I think the multiple that PSTH got it at is pretty decent. And I think there's value in it, and I think there's value in the multiple expanding, and I think there's value in the growth that's to come. Now, that all assumes that you bought this thing at $22.50, or you bought it at a relatively reasonable price point, because if you bought it at a much higher price point, it'll take a while to catch up to that multiple, because even if I put this multiple at a 27 and kind of leave these other values where they are, it's only a 10% return at today's prices, assuming this multiple expands that much. If the multiple doesn't expand at all, you're potentially losing money, right? You're down 2%, assuming that the multiple doesn't expand. Now, you're losing money as of today. However, if the stock does grow their EBITDA by 20% year over year for the next couple of years, which I think is totally possible given the business model that they're in, you'll make that money back pretty quickly. It just might take a couple of years to get there. So if you're the type of person that is expecting returns to happen today or tomorrow, it's probably not going to happen for you. But if you're a patient long-term investor, this could still be a very good investment for you in the long run, assuming that you bought it at a decent price point. Now, if you bought this at $30, if you're unlikely to buy this at $30, you're down 26% to start, assuming the multiple doesn't expand and all of these other values are as they are. So it might take you a year or two to get to break even, which isn't the best thing to do. However, that is the reality of SPACs. The SPACs are going to make a deal based on the cash that they have in trust, which is a valuation of $20. So if you're buying something at $30, you're buying at a 50% premium to cash. That is very hard to make money on in the long run, right? That's not how you play SPACs. You should be playing SPACs buying as close to NAV, net asset value, which in this case is $20 as possible. So you can play around with this, but for me, a multiple of 26 makes sense. I think there's value in that. For PSTHR, I put this as a multiple over cash. How much value do you think you're placing in Bill Ackman's ability to find something that is going to be more valuable than the deal they make? In my mind, I don't know, right? And I don't know exactly how this deal is structured at this point or what the company is going to be. So in my mind, I leave this at 0. I am not willing to pay a multiple over price given what this deal ended up being. It ended up being different than what I expected. Even though I love UMG as a company and I'm still happy with the deal because I love the company itself and I bought in at $21 basically, I know a lot of other people aren't very happy with it, and a lot of other people don't really see the premium that Bill Ackman is bringing to this by making this so complicated. So that's a reason to leave this as a 0% multiple over cash. Another reason is there's a lot of uncertainty around this in my mind as well. So if these aren't splitting, there's a boatload of outstanding warrants that are going to dilute the crap out of whatever company they acquire. Now, that dilution is still going to be cash accretive to the company because they sell you the shares at a certain price point. And that's fine, but it's still a bit weird. And not knowing what company they're going to get, there's rumors around Plaid, there's rumors around whatever, but who the hell knows? It could be anything. It could be some garbage dump of a company. So giving it a valuation of a multiple over cash right now, certainly you can. And if you were going to, I'd do something small, like maybe 5% at best. And given where SPACs are today, I don't know if you want to do that, right? That's what got people into trouble in the first place. They were buying at a price point that's well above $20 rather. They're placing a 50% multiple over cash. And sure, you could do that if you think they're going to get Plaid and the market's going to applaud that really quickly. You can put a 20% multiple over here. But for me, I think I want to be reasonable, realistic. Hey, the deal is going to be fair, but it's not going to be amazing. And in the long run, I think Bill Ackman's going to pick a company that's going to do well for long-term investors. I just don't think they're going to get a massive pop right off the bat. So for me, I'm going to put this at a 0% multiple over cash. You can do whatever you want with it. PSTHR price at a 2168 is that non-multiple valuation. So that's essentially what it should be trading with. Tontine warrants. This is the big question mark for me. What the hell is the strike price of this thing? There was a notion that the director sponsor warrants are going to be at 120% over NAV, which is what they were for PSTH. This is where I think investors have the potential to get screwed the most. Tontine warrant strike price will be adjusted down by fair market value of UMG. That's what the language was in the presentation and in the FAQ. What does that mean? If today's price is $22.51 and the fair market value that they're paying is $13.91, is the strike price going to be $34 over a $21.68 cash price? If so, what a screw job. In my mind, the only way this would be fair for investors if this should be the strike price, $24.93. The initial Tontine warrants and the initial warrants had a strike price that was 115% above NAV, $23. These should be 115% above NAV, $21.68. That's the only fair way to do it. If that's not the case, then the valuation of these warrants is in question. I think I'm already putting them at $3 simply because there's so many of them. That's much different than the number of warrants that are out there now in relation to the number of shares. I think there's 9 million or maybe 9 million distributable warrants. So that's why they're priced where they were and they kind of tracked with the stock price. I don't know if these are as closely going to, they should track with the stock price. However, the uncertainty around the strike price really worries me here, because at the end of the day, if the strike price ends up being a lot higher than 115 of net asset value, these things could be worth cents. These things could be worth $1, right? It's all dependent on how close to the actual shares the strike price ends up being. If the strike price is $24 and the company's really good, then these warrants could still be worth $6 to $7, right? If the company ends up being something really valuable and the market prices are up to $30 really quickly, then sure, these are potentially worth a lot. If the strike price is something ridiculous, whatever this fair market value of UMG ends up being, if it ends up being like $30 or something, these could be worth 50 cents because your strike price is so far off of the PSTHR price, then the valuation is almost worthless, right? So that's where I'm sitting with these. I don't know. This is the biggest unknown to me because I don't know the strike price. And then you've got your SPARC, another question mark. And this is, what do you value the rights to buy something that may not happen for 5 years, And it all again depends on the company that they acquire. The good thing about the SPARC is that there's no actual cash outlay that you have to put into it until the deal is announced. The one thing that people complain about PSTH is, hey, I locked up my money for 8 months and this is what I got. Yeah, that sucks if you don't like the deal. With SPARC, you're not locking anything up. You don't have to give them any money. You just get these rights that you can trade back and forth. I do think they have some value. I just don't know what that value is. If I put $1, it's fair. If I put $2, it's fair. I don't know. For me, it's easier if it's a lower value because I want to have less tax exposure if these are going to be taxable distributions. But for now, I'll put something like a $2 value. I do think there's some potential in having this $10 billion company that you get first dibs on when it IPOs. It could be something really good. It could be something really bad. But that's really what's going to drive the value of all of this stuff, right? Is this good? If so, then this is going to have a lot of value. And if this is good and the strike price on this is fair, then this is going to have a lot of value. If this is good, then this is going to have a lot of value. If all of these suck, then all of this has no value, right? So that's really what it comes down to. This SPAC started as a big question mark and remains a big question mark in my mind. However, the things you do know and the things you can control is the valuation of UMG. And I think if this is the fair multiple for it, that even at today's price point, there's still some value in this company. Now, if you believe that this is worth less, let's say this is worth $0, well, it's probably not worth $0, but this is worth $1 and this is worth $1, then there's barely any value, but there's still some. And the reason, a 7% return may not seem like much to you, but what I'm saying is that it's a 7% immediate return based on what I think the true value of these underlying holdings are, right? And that doesn't mean that this is what you're going to get 5 years from now. It's what you should get today if you buy today's prices, if these valuations are true. Now, let's say it becomes at 23.1, then basically this thing is trading at, or essentially a fair price, right, at 22.51. However, if this is the valuation that the market gives it once it spins off, then you're getting an immediate 7.9% return. And then you have, obviously, the upside that UMG is going to give you year over year in terms of the return that you're going to get on that. Could be better than the market. In my mind, it probably will be better than the market. And then you have potential upside in PSTHR being better than the cash multiple that you're giving it, which is 0 in this case, and SPARC being something solid and trading at a higher than a $2 price point. So is this a great deal? It's decent in my mind if you're buying at today's prices. Now, if you bought at 30 and you're looking at this and saying, well, I'm immediately starting at 19%. I'm probably not going to make my money back until like 2022, maybe 2023, once UMG kind of appreciates in value and some of this other stuff plays out. Then you're probably not very happy about it. However, if you're buying today or if you bought at a lower price than this, I think my cost basis is somewhere in the 2150, 2160 range. I'm relatively pleased with this deal, and mainly because of this. Mainly because I think UMG is a really good business. What I'm not pleased about is, one, the Tontine warrants may be a lot worse than they were kind of sold as when they were initially a PSTH deal because of how the deal is structured. I would have been much happier if this was a complete takeover of the company and we got to exercise our Tontine warrants with UMG. I would have been a lot happier if I didn't have to deal with this Euronext listing issue. I would have been a lot happier if this SPARC thing wasn't taxable for me. So there's a lot of things I don't love, and there's the fact that you have to wait for more information, like when the heck is PSTHR going to happen? It's not a SPAC anymore, so it doesn't have a 2-year limit. They could be holding this cash for years and years and years before a deal is made. And maybe that's good, maybe that's bad, but it's certainly a lot of opportunity cost that you're losing out on. At least with SPARC, there's no opportunity cost, so you kind of have the rights to buy something in the future. And if that something is good, you can participate in it. If it's not, then whatever, you don't really lose much as long as UMG is making you money and this deal ends up being okay. But that's not good enough for everybody, right? This is a long-term play in my mind. This is something you have to wait to play out. This is something that will hopefully realize its value when the spinoff happens, but it's possible it takes a while for that to happen, right? If the spinoff happens and the market prices this thing at 23x, today's prices are kind of, they're fair value basically, right? You're not getting a good deal on this. Now, you're still probably going to do okay because UMG should, as an operating business, do pretty well. And I know people have expectations around NFTs and all of that nonsense, but I mean, who knows if NFTs are anything? NFT prices have dropped in value recently. They kind of go hand in hand with cryptocurrency, and I wouldn't bet the horse that NFTs are going to change the way this business works. But even without that, there's still a lot of upside in terms of, hey, streaming is becoming a bigger and bigger and bigger thing. And UMG is essentially allowing other companies to build out all the technology that UMG needs to make money, right? They're benefiting from Spotify growing. They're benefiting from Apple Music growing. They're benefiting from all of these other streaming services growing, and they're taking their cut, and that's all they're doing, right? They're a very high margin business on that front. The business of touring is going to come back again, and they make money off of that via merchandise sales and all of that good stuff. So the business is starting to really get into a spot where I think the valuation it's getting today is far too low, and I think the growth it's going to get in the future is going to make it for a solid compounder years and years and years forward. So that's why I like it. That's why I'm still happy with the deal. I don't like all of the other stuff. I don't like the uncertainty of all of this nonsense. But overall, it's not bad, And again, remember, 7.9% immediate return is pretty good if this is what you actually believe. You're still going to benefit from future price growth of UMG due to their earnings being potentially solid. If their profit continues to grow at a 20% clip, that's good. That's really good. If you're getting a 12 to 15% year over year return and compounding that year over year, I happen to believe that I think UMG could double their EBITDA in like four years. And if that's true, then, you're essentially 4 years forward, you're looking at an 11x forward multiple. That's a good deal, and that's obviously an assumption. But I like the business. I like the music business. That's why I own Reservoir Media. I own a few shares of WMG, but I like UMG more for obvious reasons, but also the way the ownership's structured. And they have 10 of the top 10 global artists, whereas WMG and all the other players have 0. And this is the best way to own a music franchise, essentially. A share of every song played will go to you if you own UMG. And I kind of like that. I kind of like that business model. A lot of complexity here, a lot of uncertainty with all this other crap. But hey, UMG is really good, and I wish I could own more. If you want to own more, maybe the easiest way to do this is to just buy PSH, Pershing Square Holdings itself. They're going to own a bunch of UMG after this deal is consummated. You can obviously own Vivendi, but hey, the spinoff is probably going to be taxable to you as a foreign investor if you're buying in the United States. You could obviously own Tencent. They own 20% of UMG, but then you're dealing with a company that's based in China. A lot of regulations there that may mean those companies don't do as well as they should based on the earnings that they're getting. So let me know what you guys think about this deal. I know a lot of people aren't happy, but in my mind, it's okay. I like UMG. I'll wait to see what happens with this. If I needed this money today, I'd be a bit worried about locking up my money in the trust when UMG is issued. I'd be a bit worried about all of this taking forever. The SPARC thing could be 5 years from now. PSTHR could be years from now. They mentioned that they had a non-binding agreement with somebody, so maybe they're discussing a deal with somebody already. Again, there's still uncertainty. Do the tontine warrants get split? If yes, then this will adjust for you. If not, then this is what it is. What's the strike price going to be? If it's anywhere above 115% above NAV, then in my mind, that's kind of a screw job against investors. But we'll see how that works out. I wasn't in this for the tontine warrants personally. I was just hoping to get a good company. I think I got that with UMG. I was just hoping it'd be all UMG and not all of this other stuff and not all of this other nonsense that I have to deal with. But hey, it is what it is. Guys, thanks for watching. Hopefully this video was helpful to you. If you have any questions, please let me know in the comments down below. If you think anything is wrong with the spreadsheet, send me a message on Twitter. As always, thanks for watching. Have a good rest of your day. Follow